A lot of you saw my videos on REITs, especially my video on O Realty Income. It got over 7,000 views. And I've been doing a lot of videos on REITs, on dividend stocks, on healthcare stocks, even like CVS, which is starting to play out, and UNH, and a lot of the healthcare names, a lot of the retail names like Ulta Beauty, which has played out, Dollar General, a lot of those names, but especially the dividend stocks. And the main reason I have been doing these videos on them is because this is where I believe the opportunity actually is, and this is what I try to bring you on this channel, what I believe there's an opportunity. I believe the opportunity in Nvidia and Palantir and these stocks has most likely passed by. This is just my opinion, although I would get much more views if I talk about Tesla or Nvidia or Palantir and these kind of stocks, but I'm just really trying to find the best opportunity at the moment, not the opportunity that's gonna get me the most amount of views. And I believe REITs are this opportunity, and a lot of the healthcare stocks which are playing out. But in this video, I'm gonna talk about two REITs, and those are the two only REITs pretty much that I always buy every time I find an opportunity with REITs and dividends. I always go to those two exact same REITs. I have done the same in 2018, 2019. I bought those REITs and I did make a lot of quick returns actually after this period. Whenever the Fed was hiking rates, this was normally the best time to be buying dividend stocks and REITs because they become less attractive and the multiple come down a lot, and then this create an opportunity whenever those rates eventually come back down in the future. So I'm gonna share with you my two favorite REITs, and those are the only two REITs that I buy. And the first one, I talked about it before, and this is AVB, Avalon Bay Communities. Now, as you can see, the stock is still trading before pre-COVID, although it has recovered a bit. I talked about it when it was around $162 per share. I still own this company. I talked about it in this video. Two undervalued stocks to consider. I try to do this video every single month, picking two of the most undervalued stocks and try to do a video on them. But even after the recovery, you could see where Avalon Bay Community, a very high quality apartment REIT, is actually trading well below pre-COVID, even though apartments are much more valuable than they were pre-COVID, and houses and everything is more expensive. Rent is much, much higher, but these companies are still trading where they were pre-COVID, which I believe brings an opportunity. Now, the big problem with, AVB, which is not really a problem, but kind of the bigger problem with the company, is they have a lot of exposures to kind of slowing areas, like in New York, like in California, and in the Pacific Northwest, in a lot of areas that are not growing very, very fast. But now they are selling a lot of those properties and they are reinvesting into growing areas, like in South Florida, like in Texas, in Denver, and even some places in Georgia, they're starting a lot of properties there. So they are moving away from those areas and trying to reinvest into other growing areas. And this is kind of the problem with that, because a lot of people are leaving New York, leaving California. People still need a place to live, of course, but still they're moving to those other areas. And the second stock that I talk about actually capitalizes on those moves, because a lot of it is actually exposed to South Florida and Georgia and Texas and a lot of those other places. But AVB is a pretty good company, is a resilient industry. You could look at the occupancy, it's still around 95.5%, which is very, very high. It's well, around the historical average. Something a lot of you are actually worried about is some tenants not actually paying. And this is the percentage of the tenants that were not paying. Now it's below 2%. Actually, one of the lowest it was in October. And this is the beauty about apartments, especially right now, because in the United States, we have higher and higher interest rates, but we also have higher property prices. So we have both higher cost of mortgage and we have higher property prices. A lot of people are getting priced out of the market and they have no choice but to go rent an apartment. And these companies like Avalon Bay Communities are commanding very high and very sustainable rent increases, and the rent increase is now around 5%. It topped around 6% in October, and it's been at a steady 5%, which is much higher than the inflation rate, and it has a lot of organic growth, which is why I really like REITs very, very much. They have a lot of kind of organic growth. They don't need to issue a lot of shares. shares, which I'm gonna talk about. But even though that with AVB is nothing crazy, no crazy amount is maturing anytime soon. They do have some higher maturities in 2025 and beyond, but I believe the company can actually, deal with that. Now, the main reason why I like the apartment REITs, and the second one is also apartments. I only invest in apartment REITs. And one of the reasons for that is they actually have their shares outstanding either flat or going down. And I did show you the kind of problem with O Realty Income and other kind of REITs, which I believe it's not actually a big problem because they are growing FFO per share. But I much prefer personally seeing the shares outstanding either flat or actually coming down. And in terms of, something like Avalon Bay Communities, they have been flat since pretty much 2017, and they even started coming down since 2020 because the company actually did a little bit of buybacks, which was pretty amazing. And even with the shares being flat, you had the FFO per share actually go up. Since 2016, it was around 8.19. Now it's 10.50. This is mainly from rent increases, from them taking the free cash flows that's left after paying the dividend and reinvested into more properties, more projects, increasing rents in a resilient industry. This is why I like apartment REITs a lot, and I pretty much only invest in apartment REITs. Now, if we look at the multiple of AVB, of the price to AFFO, adjusted FFO per share, this is the metric that's best to be used with those apartment kind of REITs because they have a little bit of kind of CapEx, nothing too heavy, which is why we use adjusted FFO per share, not just FFO, but it's sitting at 20 times. Now, the mean for the company is 22 times, and it's set as high as 31 times. Now, this is much, much higher than when I was talking about it at 16 times, but I still believe it's well below the historical average, and it's definitely not extremely undervalued. It's not the cheapest in the world, but this is because this is a high-quality company, a high-quality REIT. This is why it's not as cheap as Stag Industrials and other kind of companies that have a lot of debt problems and refinancing problems. AVB doesn't actually have this problem, which is why it's trading at fair value, not kind of a bargain price. And the dividend is not bad. It's around 3.4 to 3.5%. A lot of people, they don't invest in apartments because the dividend is lower than the commercial properties. But the main reason is lower is because AVB actually has higher growth than the commercial kind of stuff without them having to issue shares. And they also tend to increase the dividend much, much faster than the other kind of, commercial property REITs, which is why, again, I really like apartment REITs. I think at 3.4%, it's not bad. Maybe it doesn't make any sense because we have 5% rates, but they're not going to be here forever. Again, I would prefer if Avalon goes back to 4% kind of dividend yield. I think that would be pretty amazing. But even now, in my opinion, I don't believe the company is overvalued. I think the company is fairly valued, and it's one of my favorite REITs ever. Whenever the Fed ever try to hike rates and something, and the rates start coming down, I always go to Avalon Bay Communities first. Now, my second favorite REIT ever, which is actually much better than Avalon Bay Communities, this is a company that I talked about. I don't own it. I'm not sure why. I believe I should be, buying a little bit here. And this is actually MAA, which is Mid-America Apartment Communities. It has topped out around $230 per share. Now it's sitting at $153 per share, aligned with what it was pre-COVID. Now, the best part about MAA, it doesn't have the problems that Avalon actually had. Most of their exposure are to high growth areas in Georgia, in Florida, South Carolina, Texas, some places in Colorado, and Arizona, and Phoenix, and other kind of places. So it's exposed to very high quality, very high growth areas where people are actually moving to. And this is why MAA is actually commanding higher and higher kind of, lease increases than what, AVB is actually getting. And if you look at the effective rent growth that has been happening for this year, it's around 7%, and the company expects to continue. I mean, this is just amazing. They have those properties, they grow them at 7%, every single year in terms of hikes, but their interest expense is only 3% on the debt, which I'm going to talk about a little bit soon. But you could see the power of those kind of apartment REITs that even in March 2020, they were still able to increase rents by 2.6%. 2.6%. Whenever everyone was locked down and the world was about to end, they still raised rents 2.6%. Pretty amazing. They raised them 14.6 in 2022. This is not going to happen again. But even in 2023, where a lot of people call for a recession, they're still increasing them 7% because they are actually exposed to the right properties at the right time in the right areas. And this is something, again, that's pretty amazing. They have high occupancy rate aligned with the historical average, 95.8%. It's pretty good in general. Now, the best part about MAA is they don't have any floating rate debt like a lot of the commercial properties where they have to refinance it and the interest expense goes up and something bad happens. MAA's debt is 100% fixed at 3.4%. So they have been raising rent at 7 and 8 and 10%, and their interest expense is only 3.4% on average, and they don't have any crazy maturities over the years. And I personally believe they can deal with most of them, which is why I really like MAA. The managers in MAA are actually amazing. I used to own it also in 2018 whenever I bought Avalon Bay Communities, and this is another one where the shares outstanding are pretty much flat since 2017. They went up a bit, but nothing crazy. But while the shares outstanding were flat, the FFO per share actually went up from $5.94 to $9.17. Massive increase in FFO from rent increases, from them taking the free cash flow, developing more properties without them having to actually issue stock and dilute shareholders, which is something that's important with those REITs. If we look at the price to AFFO per share, now it's trading, pretty close to what it was on kind of COVID lows, not at the COVID lows, a little bit before. It's trading at 18.5 AFFO per share. The mean was around 20 times, and it traded as high as 33 times. So I believe, just like I said with Avalon Bay Communities, MAA is not the most undervalued REIT in the world, but it's a high quality REIT that's trading at a pretty good price, in my opinion, with a lot of dividend growth. They don't have the highest dividend yield ever. I think it's also 3.4%, but they do grow the dividend very, very quickly, and they grew it around 14% in 2021. They had a good year. So they grew it very, very quickly. I'm sure you could find other REITs that are much cheaper, but they actually maybe have debt problems. Maybe they're not growing very, very fast. Maybe they're issuing a lot of shares like a lot of the commercial ones are actually doing. But those are my two favorite REITs, and anytime I see the Fed hiking rates or I see any kind of opportunity to buy them, I always go to Avalon Bay Communities and Mid-America Apartment Communities. So maybe you could look at them, maybe put them on your watch list, maybe the next buying opportunity or something crazy happens. Those are the two REITs I always pretty much buy whenever I see an opportunity. So no financial advice, of course. Thank you for watching this video, and I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.